It's Sunday, November 28th, 2021. Hope everybody had a really good weekend. A few articles I want to share with all of you today, a few things I was reading earlier this morning. And one that really stood out here was this one on CNBC titled Black Friday Shopping in Stores Drops 28% from 2019 Levels as shoppers spread spending throughout the season. And I thought this was pretty interesting because it says that traffic was up 47.5% compared to a year ago, yet spending drops 28% from 2019. Online sales fall from 2020 levels. Black Friday sales rang in $8.9 billion, down from the record $9 billion in 2020. So still an enormous amount of money being spent, especially online. The NRF expects holiday sales during November and December to rise between 8.5% to 10.5%. That's 843 to 859 billion dollars. This would set a record for year-over-year growth. And when I read stuff like this, it really, really makes you think: how in the world is this even possible? Especially with the shape of this economy. And the only thing I can think of is people still have some of that stimulus money left over and some of that benefit money left over. People did pay down their credit cards, and they are returning back to credit cards, and they're going to use those credit cards to continue to shop this holiday season, just like they used it last holiday season, the holiday season before that, and the holiday season before that. And so they're going to continue to buy things with money they don't have. But it just really makes you really shake your head when you look at these numbers. This is with 11%. I read an article the other day to all of you on CNBC. I think it was 11% saying that they would not be buying gifts, period, this holiday season. So I think another thing we do have to factor in is that top 1%, they're spending so much money. They've made so much wealth over the last year and a half in these manipulated markets. They've made massive fortunes, and they're going to continue to buy more jets, more exotic cars, more islands, more investment real estate, and more tangible assets. And so this is having a big factor, I think, in these numbers too, that the top 1% are going to be spending a lot more money. Again, how in the world can we be looking at numbers like this when last month we had 4.4 million people quit their jobs? We've been losing hundreds of thousands of jobs every week for a year and a half. There has been no recovery. We printed massive amounts of money, and in return, we've gotten a massive amount of inflation, and the average person is struggling. 80% of this country, minimal, is living paycheck to paycheck, and yet we're looking at these type of record-breaking holiday numbers. Doesn't make any sense. So let me know what you think about that. Is it the top 1% that is making up for all of this? Are these numbers completely manipulated? I don't really know anybody personally that says they're going to spend a lot more money than they did a year ago. People I know right now are really tightening up their budgets, and especially the people that I know with money, they're just not out splurging like they once did, because they realize too that something is right around the corner, and people who are really awake here are being very cautious with their money because they know something's wrong and something is coming. Here's another article today on CNBC. Almost 80% of small business owners say shopping small is more important than ever before. Holiday sales will likely decide how many of these small businesses stay in business in 2022. And we've lost, over the last year and a half, hundreds of thousands of small businesses. Last year, 33% more businesses closed than in a typical year. Many of the surviving businesses have piled up massive amounts of debt, ladies and gentlemen, and many of these small retailers haven't made a rent payment in over a year. and many of them owe so much money in back rent. And it doesn't, to me, matter how good this holiday season is, because so many of the small, medium business owners are so far behind that I don't think it really even matters. Many of them are on borrowed time. I do hope that they do have a prosperous holiday season, though. I hope that they have record-breaking sales, but I think it's going to be too little, too late for many, many small and medium businesses in America. Unfortunately, it's really, really sad. But we never hear much about the small business owner, the small businesses. How many of them are still behind on rent and leases, haven't paid? Many not paying yet, up to this point right now, still not paying. The Westfield Mall in my area here is in foreclosure. Do you think that, and that mall, by the way, is about 30% vacant. Do you think those business owners are paying rent at that mall knowing that the owners have defaulted? It's, again, a matter of time for so many of these small businesses. Here's another one coming from the Hedge today. Christmas tree shortage develops as consumers may pay record price. So we just saw the most expensive Thanksgiving ever. Now we may see the most expensive Christmas ever. So it's just, one punch in the face followed up by another punch in the face. And the average American is just having a very, very difficult time keeping up with all this. And it's really, really sad. And then on top of that, all these supply chain disruptions, people want to get their kids toys. They're going to pay a record amount for those toys if they can even get them. Artificial Christmas trees could cost you as much as 25% more this year than they did a year ago. A real Christmas tree, get this, a real Christmas tree this year could cost you $100. And they're blaming that on the summer drought that we just had. So is it droughts? Is it supply chain disruptions? Is it transportation issues, fuel prices, labor shortages, labor prices? It's all of it, ladies and gentlemen. And it's just another sad reminder that this is going to continue to get worse. As we just exited the most expensive Thanksgiving, and we're about ready to enter the most expensive Christmas. So get ready for that. Here's another article today I want to share with all of you. And this one comes from The Hedge. It's titled, "Why Did Satya Nadella Suddenly Dump His Microsoft Holdings Last Week?" As most of you know, if you don't, Elon Musk has been aggressively offloading his stocks. Jeff Bezos has been selling large chunks of his stocks. And now Microsoft's Satya Nadella sold about 838,000 shares of common stock on November 22nd and 23rd. That massive sale accounted for around half his total holdings. So what is going on here? Comment down below. What do you think is going on? And what do they know that we don't? Comment down below. Love to know your thoughts on that. But there's something going on, ladies and gentlemen, when you see something like this taking place. Something is definitely going on. Another article today coming from The Hedge. It's titled, "Social Security Closer to Crisis." And I bring this up because it's a good article, but we all need to be our own central banks. And as I've said in the past, and as many of you already know, you cannot rely on the system, and your pension may not be there in the future. Your Social Security may not be there in the future. And if they are there in the future, how much of it will be there for you? How much of it is going to be destroyed by inflation? And this is why you must be your own central bank. This is why you must be planning on your own retirement by putting away assets and making preparations and getting out of the system. The system, ladies and gentlemen, is melting down. And much of this is going to look a lot different 5, 10, 15, 20 years down the road. And I truly believe that we cannot be reliant on these pensions and Social Security. It is being destroyed. It's being stolen from. And you need to protect your futures, your retirement, your wealth, everything in between. The gap between promised benefits and future payroll tax revenue has reached a staggering $59.8 trillion. The gap is $6.8 trillion larger than it was just 1 year ago. In 1960, for every Social Security beneficiary, there were 5.1 workers adding payroll taxes to the system. That ratio, ladies and gentlemen, has shrunk to 2.7 and is expected to shrink down to 2.2 by 2036. We do not have enough people paying into it. The people that are going to make out are going to be older people. The people that are going to lose are going to be younger people. It's running out. And we're not having as many children in this country. We're not replenishing the workforce. We're not making things. We're not manufacturing things. We have 107 million people not in the workforce. That means they're not paying into this retirement. And so it's going to be a bad situation. And so things are going to look a lot different in the not so distant future. The Social Security Trust Fund is projected to run out in 2033, ladies and gentlemen. That would trigger a 20% cut for everyone receiving benefits at that time. Imagine what that's going to look like. You're going to get 20% less, and imagine how much more things are going to cost. Can you imagine what a gallon of gas is going to look like and cost in 2033, what a pound of bacon will cost in 2033, and you're going to get a 20% cut in your Social Security benefits? To maintain current benefits, it would require Congress to make extreme changes, such as raising the payroll tax from 12.4% to 17%, ladies and gentlemen. So just like anything else, the answer is to tax you more, to take more money from you. Yet this country will continue to spend more. See, we don't really have a revenue problem. We have a spending problem. We're spending way too much. We have way too much going out than coming in. And so we cannot control our spending. Our politicians cannot stop spending. And so all they're going to do is tax us more and more. They could repeal the gap, which higher earners end up receiving benefits that are a quarter of what they contribute, and they would redistribute this. So, I mean, again, this is completely unfair. They could put a damper on Social Security cost of living increase. That would be another problem. And with inflation soaring, this shouldn't be taken lightly. So basically, as inflation goes up every year, your Social Security will not go up with inflation. And it's not even going up with the cost of real inflation right now. So that would be another huge problem for the average American. How about this? They could change the age requirement of retirement from 65 to 67. And what stops them from saying, maybe it's not 67, now it's 70, now it's 72. Again, it's not going to work out for the average American, I'll tell you that. If you contribute to your own retirement, such as gold, silver, and other assets, they're going to have a much harder time reducing your wealth, ladies and gentlemen. But if you're 100% in the system, they can reduce your wealth to quite literally zero. They can really, really damage your life. Wolfstreet.com, what's behind the pileup of new houses for sale? Highest since 2008 as construction costs spike most in 42 years. Inventory of new single-family homes rose by 389,000 in October, highest since September of 2008. Sales of new homes not started under construction and completed fell 23% from last year. Given the sales in October, the supply of new homes for sale stands at 6.3 months and has remained roughly at the same level above 6 months. It is all about construction costs, labor costs, supply shortages, etc. Or is it really shortages now of buyers? You know, I keep hearing about this housing boom and everybody buying homes. Again, they don't tell you about all the institutional money. But look, when the average median income in this country is $34,000 and we're looking at the average median home at $380, Something just doesn't add up. When 4.5 million people quit their jobs in a month, something doesn't add up. You cannot have a strong housing market when people are not working, when people are only working part-time and they're earning low wages, and when a majority of the jobs out there now are in the service sector. So what gives? What's really supporting this housing market? Or are these numbers all manipulated also? You can look at the inflation numbers, you can look at unemployment numbers, you can look at housing numbers, you can look at the stock market. How much of this is so manipulated? We know that real inflation now is around 15%. We know that unemployment is over 20%. I think it's around 21% if you look at shadowstats.com, John Williams. So I don't know, some of these statistics we're getting, I just wonder how legitimate they really are, because I just cannot figure out how you can have a real housing boom when inflation is just eating up the average consumer, when 80% of the country is living paycheck to paycheck, when a majority of these jobs are in the service sector, and people, again, just their paychecks are being eaten up. And how many people have blown through their savings now at this point, now that all the free money is over? And on top of that, millions of people in the process of eviction, their credit's going to be destroyed. How will they go and apply for a mortgage to buy a home when their credit's been destroyed? And if things were so good, how come we had millions of people being evicted? Yeah, a lot of them didn't pay their rent, but a lot of them just could not afford to pay rent. So the whole thing is a mess. But we're going to hear how great holiday sales are and how everybody went out and spent money that they didn't have and acquired a lot more debt. We're going to hear about how the economy is recovering because they're printing tons of money and it's just more continuous QE. Don't worry, a gallon of gas will only be $6 or $7. A loaf of bread will only be $10. A box of cereal will be $8. And remember, you're going to get less quality, less service, and less for your money across the board. And you're going to have to work twice as hard to make that money. But look, it's a beautiful day today. It's been a beautiful weekend. I'm going to continue to do what I've been doing, and that's prepare a little bit every day that I can. I ordered a couple more ounces of gold from SD Bullion. I'm going to order some Berkey filters, additional backup filters for my water filtration systems. And keep putting a little bit of food and water away, a little bit of cash away, and maybe buy another pair of good shoes or boots, and just keep doing a little bit, every day. And the biggest thing I think you can do right now is just get in a mental mindset, walk close to God, and really educate yourself on what is going on. It doesn't cost anything to read. It doesn't cost really much to go buy a couple cans of food or a case of bottled water. People just have a hard time making the sacrifice. They want to go out and have fun all the time. I get it. Fun is great. It's good. It's fun. But this is not the time. A lot of people say, JB, you don't smile enough. You don't laugh. When I make these videos, I'm really, really serious because I see where this is all going. And I'm watching right now a lot of people getting hurt, even though they don't want to show that on the television. But, here in California, Oakland, San Francisco, Los Angeles, Riverside County, San Bernardino, I see the homeless epidemic. And many of you have commented that you're seeing it in your areas now too. And I see people really, really getting hurt. And I see people that need to be getting help who can't get help. And I just see that we're going to have future problems here with food and shortages, supply shortages, food shortages, people's anxiety, depression, suicide going to go through the roof. And it's not good. So it's hard for me to smile and laugh and make jokes with this going on, ladies and gentlemen, because I'm really, really concerned about what we're heading into in 2022. This year, I think is going to really, really expose some serious trouble in this economy. And, we're going to see more families out on the streets, people living in their cars, in their RVs, in their vans, and less opportunity. That wealth gap is going to continue to increase. The opportunity gap is going to continue to increase. And it's scary, ladies and gentlemen. It really is. So, to the people out there that go, oh, why don't you smile? Why don't you laugh? Because this is the most serious thing I've ever seen in my life. And I can't, not to say that I don't ever laugh or have a good time, ladies and gentlemen, but when I make these videos, I'm very focused on what's happening, and what's happening is very, very serious. So it's very hard for me. Please, I do apologize. I wish I could joke around more. I wish I could make funner videos. I wish I could be, making car videos and doing cars and coffee and going to car shows and, showing you beautiful cars and fun and all that. But right now, this is the most serious thing going on. And I believe that everybody out there watching my videos needs to be preparing and getting ready. And so again, this isn't a time to joke. This isn't a channel of games and jokes and laughs. This channel is very, very serious, because we have never been in a time in our history where things have been so serious. The threat of this economy and the US dollar, it's serious, ladies and gentlemen. It is no laughing matter, okay? And that doesn't mean that you shouldn't laugh or have a good time and whatnot. That's healthy. It's good to do. But when I make these videos 15, 20 minutes or whatever, this is a serious time for me to speak with all of you. And I want all of you to take it very, very seriously and get prepared. I'm going to leave it there today. Have an incredible week. I look forward to talking with all of you very, very soon. Comment down below. Love to know your thoughts. God bless every one of you. Stay safe.